Recording and say hey to Steve and Andy. What's going on today?
Hello, Scott.
Hey,
How you doing?
good.
Andy, I know how you're doing.
Yeah, I'm hanging in there, man. Hello, Scott.
Andy's been grinding it through like a champ, a stoic champ through the flu for the last longer than a week now. So I appreciate him helping show up and maybe chime in and be an extra set of eyes and ears for me on the trade of the week. And hopefully by the time he gets to his webinar Thursday, he'll be feeling a little bit better. So thanks for showing up. This is the Tuesday version of our Trade Ideas webinar series, 5 o'clock Eastern, Monday, Tuesday, Wednesday, Thursday. This is the one where we focus on the trade of the week that went out Mondays. We talk about some other things to try and create a little bit more content, try and make some observations of the day, maybe give you a few things, share a few things as well. But quick disclaimer, just always got to do this, remind everybody that we are not here soliciting investment advice. We're a software as a service provider. We are content providers. We're here to show you some cool technology and how to use it, and that's that. So please don't misconstrue this as investment advice. Seek out a registered investment advisor or a broker who has taken their series fiduciary steps to collect fees from you and give you advice, which is probably just put you in a passive fund anyway. All right, you're not alone with trade ideas. Always got to touch on this slide. We pride ourselves tremendously on onboarding new users. We recognize this is a very powerful program that's been around for almost over 14 years now. And in addition to the webinars, as I said, Monday through Thursday at 5 Eastern, each kind of has a different flavor. Yesterday was the traders room. Yesterday was office hours with Jamie and myself, and today is the trade of the week, where we'll focus on a couple things, primarily the trade of the week. Tomorrow is going to be the QA and demo with Dan, CEO, and Brad. You never know what direction that webinar is going to go in. And then Thursday, Andy kind of sums up the week and some other ideas in the trading studio. But at the top here, the traders room is the slide that you see. If you guys are not involved in this traders room, you don't have to be a subscriber and you don't have to pay anything. Free is a very good price, and we've got hundreds of people in here in our Trade Ideas live trading room with Barry Anderson moderating and using Trade Ideas technology, in addition to a couple of really good traders that are in there as well, giving some good ideas in real time. So if you haven't signed up for the free Trade Ideas trading room, you can do so directly on our homepage right at the top navigation screen. You can just click in and follow the instructions. And what's not on here is the $99 value of a one-on-one session. We give everybody a free 1 hour when they join, just a minimum 1 month or longer, and then you schedule a session with one of us, and we'll sit down and custom tailor the needs for you, find out what you need to use the program for, and kind of get you going in the right direction, and maybe answer any stumping questions that you had and show you how to do a few things. So that in itself, like I said, is a $99 value. And as Scott mentioned at the end of the webinar here, he's going to have a nice little promo code. So if you're kicking tires, you know, for 1 month, 15% off, you're going to get a $99 value of one-on-one coaching and 30 days to evaluate the product. That's the way most people do it. So just wanted to throw that out there. We're very proud of our onboarding, and our subscription growth kind of does reflect that, even though this slide is probably a few months behind. We're probably up here towards the corner now. Yeah, once again, we do the best we can to try and make your user experience as good as possible when you first join. Brokerage Plus for interactive brokers is coming. It's still in beta mode. I'm talking now to intermediate and advanced users. If you're a beginner and noob trader, this is not for you. You want to kind of learn the ropes of trading and what works for you, and then transpose that into our Trade Ideas technology, and you can essentially hook up for auto trading. Right now it's only available through interactive brokers, and it still is in beta. There'll probably be more brokers down the road, but again, this is intermediate advanced type stuff here, taking Trade Ideas scans and then hooking them up to a live account. But if you want more information on that, tradeideas.com/beta. All right, so typical, market recap we'll start off with, give some observations of what we saw today. We'll take a look at the Holly AI recap and some observations. If you guys recall, we did not have a trade of the week last week. I was in Chicago at a conference for a bunch of quant funds, and it was a good time, but we missed the ability to go over last week's trade of the week, which was WETF, and we'll talk about that, and this week's languishing trade of the week, SPWH. And I've got a couple of examples to show you, maybe break open, look under the hood of a couple of the AI strategies that we have that are proprietary, so you can just see visually how much configuration really is going involved in there, and what the AI is adding, things that are way beyond our understanding, or things that we could come up with. And then I've got a quick little example of just, once again, it's so important, I believe, to know your sectors. Since Andy and I started trading in '98, it really is a benefit to know what stocks go into what sectors, because you can start to tie things together. I have a small example of that. And then, time permitting at the end, if you've got a basic feature question or a chart, we'll let you know if we're taking any of those questions. We'll see how it goes along the way. So with that said, I'll hit the escape button here. I also did drop in the chat window my bio, so you know who's talking at you here. If you're not one of the regulars, you can just use the chat window and open up that, and I'll be probably using that to drop in some codes later of a scan if needed, if somebody's looking for something. So let's just kind of get right into what is going on in the markets. And if you were with me yesterday in Jamie's Trade Ideas webinar, I'm going to have to make a quick adjustment here on these crosshairs. What we've got is a pretty distinguishable trend line that's been working with the spiders. Here we go. Going way back to the beginning of the year. Touched it 1, 2, 3, 4 times now. And, the big down candle that the VIX popped up on and created a moment of fear, was once again bought back. But notice that it wasn't really bought back until it came down and tagged that trend line. Interestingly enough, that trend line is still holding with 4 days, each day with a gap, I might add. That's showing you tremendous resiliency. I mean, this is like taking a balloon underwater and letting it go. That's what the market is showing. So until we have a day where we have a couple of red candles that break this trend line, it's the same old story. This is a resilient market. People can question stuff that's going on in the news out there, geopolitical or even at home, or economic news, but some of you have probably heard the saying, the markets like to climb a wall of worry, and in this case, it's probably what's happening here. So we don't really care why. We just want to know when to change our hats and change our mentality. But for now, the mentality in the hat is to continue to respect the resiliency of the buyers that come in and step into this market. Did you want to add something, or is that just a breath?
No,
Okay.
I didn't want to interrupt you, no, but go ahead.
What we cannot see, though, is that we are close to, put my crosshairs back on, we are close to taking out new highs, but we're not there. So that's really the next order of business, is to see if not only the spiders, but I'll switch to the Qs and the NASDAQ. Same situation in the NASDAQ. I mean, we've had a very lovely resilient bounce, but we're not quite at new highs yet. So I would suspect that we're going to see some supply and some selling come into play here, unless this market just wants to take it to the next degree and just cut through this resistance like butter and move higher. That's always a possibility, but conventional and wisdom, conventional thinking, when you start to see charts like this, we know there's lurkers of sellers and supply up here at these levels. So what we do know is we bounced off the trend line, and 4 days of gap right back up to assault the all-time highs, which is essentially what we've got there in the Qs and the spiders. The IWM, which has been lagging, is still not really showing us anything, just a hodgepodge of range boundness, and again, this is the Russell 2000. So it's interesting to note, and I'll pause again. Let's just go back to the Qs. Maybe Andy can remind me of the 5 if I can recall, but it's Apple, Amazon, Google, Microsoft, and who am I missing? Who's the 5th?
I think Netflix.
Netflix, thank you. I'm going to call those the Fabulous 5. Out of the NASDAQ 100, the Fabulous 5 make up for about 40% of the weight, and the movement in this market. So it's not really a surprise that we see the leadership in the NASDAQ, which again is buoyed by the big caps, the big guys. What's happening to the little guys? Well, to go back to the IWM, it's just a mosh pit. There's no real semblance, there's no real trend, it's just a lot of noise going back and forth in the Russell 2000. So, the story is the small caps are doing their own thing while the big caps continue to drive the S&P and the NASDAQ higher. That's pretty much what I got. Do you have any observations?
No, Steve, there's not a whole lot to add. I mean, you got just a very resilient market now, and it's amazing because it seems like every down move over the last 8 years, it seems like every down move has been preluded by or caused by a macro event somewhere out there, and once again, it seems like every time we shrug it off and move higher. So it just begs the question, what would happen if the market actually sold off without any reason? It just blows my mind. It just seems like every attempt to really sell off, I'm not talking about a couple of days of just pulling back, easy, but it just seems like it's all or none. I mean, we either try to sell off hard on a macro event and catch a bid and then come back, and we've been doing it, like you said, the balloon underwater for years, and at some point that balloon's not going to come busting out above the surface again. So
this one was a real head faker, man. If you can see that volume bars down here, a huge spike in volume into the downside, a gap down, this, Andy and I are both surprised there was not much follow through. Therefore, it just makes it all the more resilient. The old school traders and the short sellers were probably just, frothing at the mouth, trying to get some shorts on at the close on this day to try and get through there. But like Andy said, until that happens, we've got a market that continues to want to go higher with resiliency, and like I even mentioned, climbing a wall of worry. Now, this trend line is going to stay very much relevant. So we'll be talking about something a lot different if we come back in the future and we've got some bars that have closed below this trend line. They might try and wick below and bounce back up and close above, but if we get a nasty close below this trend line, I'm going to call that's the #1 red flag that we should all be looking out for going forward. So, all right, we'll just leave that there. Okay, so Holly today, interesting. I've got risk off here. Let's toggle over to risk on. We can see that risk off and risk on the histogram both kind of started the day in the same vein. Some decent solid trading. Let me see if I can find my way here. Okay, so here's today's 15-minute chart, basically our gap up, and we just kind of trended higher. And then in the middle of it, actually, I'm sorry, this is our opening here, the 23rd. Gap up, came down, moved kind of higher. And typically, that's kind of what I call a horseshoe. When you have a gap up and come down and move higher, we did have some follow through through that line. But midday, and this kind of ties back into what I was saying about, the big caps leading the way. There's a lot of nervousness out there, I think, still in some of these smaller cap stocks. Because if we kind of look at this histogram and switch over to risk on, which, by the way, is, for those that are wondering what that means, this is an aggregate of the profit and loss performance if you had not exited with Holly. It basically took all the trades today into the close. And so this little hiccup here, this pullback in the spiders really did a number on a lot of the open trades at the time. And so risk on really got spooked by this intraday pullback, whereas risk off also got spooked by the pullback and actually went negative for a little bit. But Holly continued to just grind it out, and it was just kind of a risk off day, taking what the market could give us. Just like yesterday, you'll notice we had up here in the parent window, we had 2 short strategies that never fired. Same thing happened yesterday. We had 2 short strategies and they didn't fire. So for 2 days in a row, the directional bias that the AI has been giving us has been 100% long, today and yesterday. And that essentially, was the call. I try to talk a lot about, how to use Holly, and it's not always just about the actual individual names. It's the activity, how many trades are being triggered, and more than likely, what is the directional bias. And I've said it a million times, I'll say it again. At some point, there might be a time when there's no trades in the open positions, just like that, and maybe we get some 10 o'clock data, some economic data, something spooks the market, and if you see Holly go short, 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 and take about 4 or 5 shorts in a period of 3 or 4 minutes, what that's telling us is kind of an early warning system that there's some market decay under these seams, and if that happens, don't be surprised if you see the markets start to roll over. So in the aggregate, always just try to keep in mind what's the directional bias that the AI has. Well, today it's been long, and yesterday it was nothing but long, and well, when we look at the spiders, SPY, that seems to be the order of what was going to work. So that's my first observation. 2 days in a row, the Holly, the AI, has not taken a single short, and when you marry that up against the backdrop of what the market's been doing, kind of expect that. I'm going to go through a couple trades here that I really like, and it'll dovetail into something I think you guys will also like as well. This first one is Juno. Now, I double-clicked on Juno, and some of you are probably noticing, hey, wow, look at this cool new chart gradient feature. So this is a developer's version. It's not available yet, but I'll just tell you the next beta version that Trade Ideas offers, you're going to have this ability to take a look at a different way of kind of framing the Holly trade. So let's zoom in a little bit. Here is a nice blue line with the blue tag showing us the actual entry of 24.05 right there, entry price 24.05. A couple things I really like about this. I mentioned it again yesterday and whenever I can to try and highlight it. Holly sees the market a little different than we do. And because of that, sometimes a pullback doesn't always resonate with our brains and our eyeballs and what we want to feel as maybe as a safe entry. But once again, Holly nailed a really nice on support, basically not chasing 4 or 5 bars, but waiting for buying on support. So any of these strategies that involve pullback or buying on a pullback or buying on support, I think there's tremendous value there because this is really a lot of the stuff that the AI sees and the plot graphs and the statistical models that we don't see. And so what you have here now is we still have the same old arrow showing us that this was the wick, pulled right down to that level perfectly. It was basically a perfect entry for, but lack of a better word. And then it gives us this little graduated red margin here, which shows us graphically where our stop would be. If this trade did not work, this red tag would have stopped out down here. And then the green basically is going to continue to go for as long as the strategy requires. So this one on support Juno is called on support. And if we look at on support in our parent window, profit target was $2. So pretty big profit target, and that's where that green gradient starts to come in. But once again, I really, really like the pullback type entries where Holly is saying, I feel like this is a wonderful case for buying on a pullback because, let's face it, we don't have much wiggle room when we're buying after 4 or 5 green bars in an intraday chart or even a daily chart. One hiccup, one big pullback, and it could spook a lot of people out. And it probably happened right here to a few people. But that opportunity or that loss becomes our opportunity when the AI brings to our attention that this is a statistically probable area to bid into. Here's our risk, and our reward is up here. I think you had something you wanted to say about this trade, didn't you, Andy, before I moved on to the other one, or should I just keep going?
No. I could definitely, yeah, I wanted to talk about, because people always ask us about risk on and risk off, and we have to end up explaining it pretty much every webinar we do. But we want you guys to know we put that in there for your benefit so you can kind of see, it, basically, if you held the trade for the end of the day, what you would have made. Because we have a lot of people that come in here that are not just scalpers. They're not just looking to grab something and hold it for, 15 or 20 minutes, take 30 or 40 cents or whatever. There's different styles to trading. And this is a good example of where you could have 3 different types of traders come in here. I'm going to use the example of a scalper, a day trader, which not necessarily the same, and a position trader / swing trader. So a scalper may come in and take this entry right here and write it, for until a bar reversal. So maybe you get up there to 24.50, you finally see a bar reversal, a 15-minute bar reversal, and you're out. That's a nice, that's a very nice long hold for a scalper. Whereas a day trader who may be looking to position himself and pretty much just stay with the trade, until he's either, stopped out for a reason, whatever his stop parameters are going to be, but he's maybe looking at to hold it for 2 or 3 hours or till the end of the day. So this is an example where as he puts on more risk by doing so, but he's rewarded a lot more because he put on more risk. He didn't take his profits in that first move. He set through the downdraft on a pretty extreme pullback there, but yet at the end he was rewarded a lot more. But remember, he's putting on a lot more risk because he had profits and he let him, a lot of those profits erode. But look at the daily there, okay? A position trader, this is an example of Holly calling out a trade where it's a beautiful little daily. Just recently is hitting a multi-month high on the daily, and now you've had several days of pullback and a nice little setup bar there, nice little spinning top, we'll call it, as a setup bar. And then today, it reverses through. So somebody with a longer time frame may just say, hey, I like this setup. I'm going to hold this for 2 or 3 days. So I think you guys, a lot of people try to put too much pressure on Holly and say, oh, how long do I hold it? When do I get out? Just remember, these are ideas, and this is a really good idea of where you can basically dissect this trade and use it for basically 3 different time frames, and all 3 of them be successful and make different amounts of money. I just think that's important to point out. The reason we want to give you this risk-on column, so you guys will have something to look back at the end of the day and just say, well, let's see if I'd have held this close, to the close, what would have happened versus getting out on Holly's exit strategy.
Yeah. Another thing that comes to mind is, looking at the daily chart here, we've got higher low, higher low, higher low. Also, like I did hear Andy say, a nice bar reversal. So that would be, again, looking at the bigger picture, and you can see the gradient actually shows up here on the daily chart as well in terms of risk reward on that particular trade. So again, I really like the pullback strategies versus the breakout strategies. Let's go to another one here. Let's go to CUTR. This one's called Tailwind, and we'll get to that in a second. First thing that comes to mind is the blue line here on the daily chart. Let me just mark that up. Hang on a second so you can kind of get a better idea of that. So on the daily chart, we had already cleared a lot of this stuff as the blue entry line was stamped on our chart as the entry point. Now what I'm going to do for you guys here next is, I know a lot of people are curious sometimes, and we kind of keep our cards close to the chest a little bit, but on what these strategies are and what they're looking for. Well, once again, this tailwind strategy, and I'm going to break it down for you in a little bit, was also a pullback. I'm going to show you exactly. It was not buying a breakout. It was looking for all the parameters setting up, but using a quick pullback, a quick downdraft for the entry point. And you can see again, even though it was a small pullback, it was the right pullback. That was the level that the AI identified as good support. There was not really an ounce of pain or a single tear to be shed after that entry. It was a good, nice, steady move the entire way up. And once again, on the daily chart, we always say, look left. Now, if this was down here in this area, we might not have been given it so much credibility or confidence in the heat of the battle. But when you see this blue tag up here on the daily chart that's cleared all of this other resistance, you've got to give that some consideration for sure. Yes, charting is a high priority. We understand, and it's been this is the beginnings, Josh, of some new stuff that you're going to start to see with some simple moving averages and indicators coming. So stay patient. We're going to continue to try and build on our charts. But I got to tell you, I see people out there that have 4, 5, 6, 7 indicators. I don't know how they do it. I don't know how they avoid analysis paralysis. Sometimes just the cleanest charts can be the best charts, and you can just look at something and see where the levels of interest are and where the levels of support and resistance are. And it's actually, it's a good exercise sometimes to not have to rely on too many indicators on the charts. But I hear you. I hear you. I hear you. All right. Anything else here that was interesting on Holly? Let's see. Float on. That really Yeah, that was kind of a basic entry with just a little bit of move on. So, all right, so this brings up a good question here. Float on and tailwind. I'm going to actually break these down for you, and I'm going to show them to you. I'm going to show them to you the way Holly has arranged them in, did you have a question?
No, be careful, man. You're giving away our strategies here.
Hang on one second. Let me just find, what is it? Float on. All right. Hang on one second. Float on. Oh, where did it go?
Give you guys a little bit of the secret sauce, I think.
Why is it doing that? Hang on a second. Let me just, here we go. Okay, float on, configure. All right, let me bring this over. Look at that. I mean, let's just take a simple strategy that, like trend change lubricant. Actually, I can't bring it up at the moment, but trend change lubricant probably has about 5 or 6 filters, and that's about it. But it looks like what float on is doing here is it's looking for the event of crossing above resistance. Let me go back to the float on example. There it is. Okay. So let's take a look and see what we can figure out here. Window specific filters. Now, all of this stuff has been computer generated by the AI. These are not values and figures that we placed in here. This was all done by back testing. But sometimes we can get, just a little bit of a feel for what it is it's looking for. So we know that it's looking for crossing above resistance. Okay, so that's going to be the trigger. But all of our filters here looks like we're capping it out at 20 million. So this seems to be the reason it's named float on. It's a low float type of a move with a setup that's not looking for stocks that are above 20 million, I believe. If we look at the, there it is, yeah, 20 million. So, a smaller portion of the market is what it's looking for. The price is really irrelevant. We've got some 15 and 1 minute RSIs here. Just a lot of stuff, more than I care to even try to break down. But for the most part, it looks like, that we're trying to break through resistance on stocks that have lower floats. But all of these extra filters, this is the kind of stuff that we talk about that Holly's doing every single evening, going through and back testing and creating an optimized strategy. Because this is the kind of thing that definitely we couldn't come up with on our own. That's for darn sure. So I just wanted to kind of maybe just take a look at what that was looking for. So it appears, once again, float on is looking for crossing above a resistance of low float stocks. But all the other special secret sauce in here is the stuff that the AI Holly figured out using the deep learning techniques that goes through there. Just to give you an example, here's one that I made on my own that's not optimized, and that's about it. It's about 8 filters, and that's about it. What was the other one that I wanted to look at I thought was interesting? Yeah, Tailwind. Let me find Tailwind over here. Strategies, Tailwind, configure. Okay. This is interesting. Let's go back to our Tailwind chart. It was that CUTR. Shoot, I've got to cancel this first, but I want to bring the chart up. Okay, I had mentioned that our arrow was entering right here at this tag 2175. So what was the triggers on all that stuff? Let's just take a look at a curiosity here. Tailwind, configure. Okay, so what's our event? Again, everything has to have an event. The last thing we looked at was crossing above resistance. Well, in this case, we've got the old alert running down a minimum of 10 cents or more. So running down basically just means the bids are dropping, the price just ran down pretty quickly in a short amount of time. And so what happened was the price movement probably ran down real quick right to that level, and that was the level at which the alert triggered, and then a green bar popped right back off of that and had a really nice move higher. Let's see if we can kind of deduce, what's going on other than the entry.
Click on that hide unused, Steve. I think that helps in the lower left. Yeah.
Yeah. Okay, so our price, interestingly enough, is between 20 and 60, so no under $5 or $10 stocks. The 20-minute range can't be more than $1.49. That's interesting. The S&P change, okay, so this is what we call a market filter. This means that this strategy is only going to fire if the S&P is no more than 0.3% negative or no higher than 0.5% positive. So it's kind of a little 0.8% window here of what the market's doing. But in the last 10 minutes, we have S&P change for the day, S&P change 30 minutes, what have you. So it's looking at a market filter at what happened in the last 10 minutes, and this is our band of movement that we have to be inside. Position and range, this would be today's range. So we're saying we're not going to buy anything at the lows, which would be 0, and we're not going to buy anything near at the highs. So the 25 percentile to the 75 percentile of the high to the low of the day's range is the sweet spot for that particular filter, okay? Change from the close. This is one of the most popular ones I share with people. If you're trying to find stocks that you want to go up, we probably want to find stocks that are up on the day. And so change from the close, if we check our work here, that button, by the way, gives us a really nice contextual layout. The price was up at least 0.01% from the previous close. So what this filter is guaranteeing was that at least we're up from yesterday's close and the price is net changed or positive for the day. All right. Interesting. Anything else in here interesting? Volume 1 minute would be 200%, which is, you know, that's double the amount of normal 1 minute volume. But I tell you, everything else on here, it's kind of above my pay grade. This is the kind of stuff that Holly came up with. So I just really wanted to break open a couple of strategies and let you see how much filtering and jiggering goes into that kind of stuff from our AI every evening that we do that. All right, where to here? I think it's probably time for the 2 trade of the weeks, right? Yeah, let's take a look.
That's good in that time.
Okay, well, I kind of skipped ahead the complexity of an AI strategy, but let's move backwards. So I want to remind people that, and it's been marked up in the content that goes out on the trade of the week, you know, what's been working? Well, I can prove to you what's been working. You know, if you're using your price alerts, here's what's been working. 52-week high, short float, short squeeze, short float, short squeeze, squeeze, squeeze. That's the kind of stuff that's been working. So what we don't want to do is take what's working and try and reinvent the wheel until it's time to do so. You know, maybe if the spiders close below that trend line that we talked about at the beginning of the session, then maybe things might start to change. But for now, it makes perfect sense that if we see a market that sucks in the short sellers like Charlie Brown trying to kick the football and then Lucy taking the football away here and jamming it right back in their throats, this is just a recipe for short squeeze day after day. And so we're continuing with that theme. So last week I was not here to explain the idea. The idea was actually after these 3 candles right here. We had earnings behind us. This was showing up on the trend change lubricant with a short float of 32%. And as it was, it gapped up a little bit on us. So essentially, you know, the entry point for the most people is going to be right around in this area. Now, what I like about it is the last 2 times that we tried to come in and fill the gap, you've got the buyers stepping in. I really like to see these bottom wicks. I would much prefer to see these bottom wicks stepping in at the area of support rather than top wicks throwing it back down. So, you know, for now, the price is still protecting this gap. There's really nothing unusual about, you know, having to wait for some consolidation here. Ideally, some patience will pay off and we can move higher. But the good news is it has not even really attempted to fill this gap. But that, again, was the reason for selecting it. It was a nice break of the downtrend here, intermediate short-term downtrend. We had a nice move, a go, pause, kind of a secondary go. But we didn't expect a gap up. What happened was, I believe Citibank or Citi upgraded the stock that day. So didn't give us as much alpha as we would have hoped for because of the gap. But it's still in play. Moving sideways is better than moving backwards. So wet F still intact, and we'll leave that at that. So this week, we actually had a couple of ideas, and I was even toying Andy with the idea of kind of maybe even showing them our short list, but we'll see about that. What we decided to go with was a stock that just came off earnings. Sportsman's Warehouse. The earnings were indicated by the giant green candle reacting to the earnings, but we also have, again, the short float contingency. And again, real quick, why am I talking about short float? If somebody doesn't really understand that, when you're short a stock, the only way to get out is to buy it back. And buying begets buying, and you're competing with longs that are buying, and it becomes a perfect storm of buying, and that's what we call a short squeeze. And coming out of a earnings, we felt that there would be, you know, some more room on this one to move. We even said in the newsletter, be prepared for a possible gap up. But we didn't get that. What we've got is just kind of working off that particular green candle. It is very possible that we may even get a move down to this level. Prior resistance could become future support. You know, ideally, I'd like to see that maybe on the open. If it tags it and then bounces, maybe that'll be the worst of it. But on this one, our risk management is going to stay above 5. And we're going to keep that basically around 498 as the risk management. Ideally, I would have loved to have seen, you know, some higher movement today because yesterday could have easily been a day of rest where you call it a go, pause, go. But the move higher can still come. We just may have to come and kiss this level first. Just be prepared for that. All right. Anything you want to add?
Yeah, well, yeah, XRT is not really working in our favor either, right? And we discussed that. You know, we didn't know if we wanted to do another retailer, but if you take a look at XRT, the daily there, you can see it's kind of looking pretty ugly. Yeah, and if you look at the even scroll, if you zoom out on the daily, it's trying to break some levels here. So yeah,
okay.
Definitely love to see it dig in there, but
well, again, you know, it's a piece of the puzzle.
Yep.
We try to work off of technicals for the most part. I'm going to do this too, just for fun. Here's where a couple of stocks on our short list. All right, we were looking for a possible pullback to the 50. RCII showed up on that, and Andy and I both kind of felt that, you know, even though this would be a safe entry, we weren't really quite sure what type of resiliency this market was going to have. Well, it showed itself pretty well, but not really what we would want to have seen if we had bought our CII on the pullback. Okay, same one, the 20 or the 50-day pullback. ZAG was also on the short list. ZAG threw in some alpha yesterday, but it's right back kind of underwater again today. So the pullbacks aren't really working. I think Pitney Bowes was another one that's actually doing okay. That one was in there as well. But we decided to not go for the pullback alert. We decided to go for the momentum and short squeeze. God, why am I drawing a blank?
It's a tough one.
Yeah. So you know, a lot of people think of it. You know, 36% people short this thing. A lot of people ran from one side of the lifeboat to the other on this day, but I'm sure there are still a lot of people that might be trapped in here. So there still could be some meat on the bone if the short sellers capitulate. Now, if XRT does just take a giant dip down and technically break down, well, it's your discretion, guys, as to whether you want to stick around with a retail stock. But for the most part, we were looking at a single stock event where the short sellers got caught on the wrong side of the boat, and we were looking for some more. But managing risk is going to be our number one duty, as always. Just don't be surprised if we see a pullback maybe quickly to 520, but we're not going to let this thing go below $5. All right. Okay. Somebody's having audio controls, but I'm sorry, you're the only one that's having them. Can you share your single stock window, Carlin? And yes, I'll be happy to do that. Real quickly, you know, as I double click through Square, which was a trade of the week that's just producing dividends here off of my squeeze 52-week high. You know, if I double click into anything, what's the first thing I'm looking at? I'm looking at short float, especially right now. Well, 45%, and these people are suffering a 52-week high, which is probably one of the more diplomatic word for it, non-advisable things to do as a trader is to sit short 52-week highs when you've got a high short float. That's basically what's happening here. So when I double click on things, I'm looking for what's going on, which brings me to something I didn't want to forget about. My washout bounced. I didn't even show you this one, Andy. Check this out. Isn't that kind of interesting?
Mm-hmm.
So let's take a look here together. What do we got? Short float, meaningless, no short float. Earnings per share, positive. Earnings date, we got 9 days away until earnings come. All right, quarterly revenues are going in the right direction. For those of you that are into fundamentals, not a lot of debt to revenue. I got cash. So this is what I quickly look at, and somebody's asking for a copy of this, and I'm going to drop it in the window. I just wanted to give a little bit of background on it first as to how to use it. Short float, again, the float's 53 million. That's always something of interest. And then definitely, what's the average daily volume? 629,000 is pretty good. And then if you look at the top, the relative volume is always going to be there. I'd like to see that. And I would be remiss if I didn't talk about one of my favorite ones, which is the 5-minute volume. 5-minute volume can come in really handy if you're stocking something that's getting close to a breakout or a new high, and you look down on the 5-minute volume candles, an anemic 22% of normal, which would be 100%, and then you're like, whoa, maybe I'll back off here. But if I see volume rushing in 300, 400, 500% in a 5-minute candle as we're at an inflection point trying to break out, well, now we as Trade Ideas users have a little bit more information than the rest of the traders out there might have. So that's, again, one of my favorites. So I will share this. It's going to show up as, if for those of you that receive this link and take it, it's going to show up as Xera Corp because that's the title of the window. So what we're going to do is, again, on the on the GoToWebinar toolbar here on the left side, expand the chat window, and I will type single stock window and drop this in the code. There we go. Okay. But I want to come back to this for a second. This is one of my favorite swing trading alerts. So what I'm going to do is in real time here, here's what happened. Let's take a look at the daily. Okay, we got higher lows, nice trend. Everybody up here, what was their biggest fear? Oh my God, I'm going to get stopped out in the gap. Well, as it were, right on the open, the algorithms ran the stops, bounced it back, and then traded back up an hour later. And here we are with this giant hammer candle. Hammer candle is probably something a lot of you guys have heard, which many times can signal a bottoming or a type of a reversal. And in this case, it pretty much filled the entire gap and then ran back to highs. This is the kind of stock setup that I really like to keep an eye on for the next day. So what I would do is I would take today's highs right here. I'm going to set a price alert, create price alert, call this my washout bounce. And tomorrow, if it takes out those highs, you know, these types of candles typically, in my opinion, when you see them, they have mitigated the near-term volatility and near-term risk. So once you see, and especially a red candle before and then down, this was a pretty good, reversal. A lot of people got shaken out on that, and it's been my experience that sometimes you can get a good 2 or 3, 4 days of nice, slow-moving swing trade setups to move higher. So when I do a lot of one-on-ones, I share this with people and tell them, if you're working, you don't have a lot of time to monitor the market, at the end of the day, if you see something like this with 10 minutes to go, you can feel comfortable buying it into the close, or if you want to wait till the open the next day, see how it opens, but you might be chasing a gap. So I just quickly wanted to highlight that one as well. All right, how are we doing on questions?
David wants to take a look at WTW.
Weight Watchers.
I'm sure you won't mind doing that.
No, it was a trade of the week since February. Well, handy dandy short float. Well, again, I'll preface this that it's at 79%. It could be lower because the way it works is the brokers have to report to the SEC twice a month. So this figure may come down as the next SEC report is disseminated for short float percentages, but still, unbelievable amount of short sellers driving this thing to new highs. Now, what do we have going now? I think it may have got ahead of itself a little bit. Really nice move to new 52-week highs. And then this is just the opposite of what I was just talking about on the other one, on the bottoming tail, the hammer. This is the opposite. It's more of a topping tail. So I don't necessarily care for this. I feel like this could be the precursor of some chopping around and some sideways action, hopefully sideways action, but this kind of means typically we're going to put the brakes on. So this isn't a pattern that I would necessarily want to jump in and buy the next day. It's kind of more of a warning sign like, hey, the price got ahead of itself a little bit. Maybe it's going to want to come back in line with the trend line here, which I'm not going to draw, but you could kind of eyeball it. Which, you know, did you have a different take on that, Andy?
No. It's just, yeah, off to the races. There's nothing to add to there.
Yeah, I knew this question would come, and I'm prepared for it. Is there a master list describing Holly's strategies? I kind of teased you with some today, and I am behind the scenes working towards trying to get that out. Nothing too specific, but basically this is a strategy that looks for a pullback at this time of day and things like that. So, you know, we fully understand that people want to have a little bit more description of what the Holly strategies are, and it's been a long time coming, so we are looking to put something like that together. I don't have a time frame for you, but I know if I was a user, I would probably want that too. And then, you know, in speaking on Devil's Advocate, Dan Merkin, the CEO, really likes people to not try and overthink things, but necessarily, you know, just kind of trust what the AI is saying and leave it at that without overthinking. But I think there's a happy medium in there somewhere, and we should be able to get something out to you guys. Any chance of getting squeezed 52? Yeah, this is a good one. You know, let's think about the. Let's break this open here real quick and think about the idea behind it. It's a new high. However, let's hide unused. We're now using this window. If this window is blank, you're just using the new high as an intraday day trading type of new high, new high, new high. Every penny is a new high. But what I did is I made a 365-day filter, so it's in a sense a 52-week high. So that's our event. And then we've got to find stocks. And I did a little bit of optimization. I noticed that this strategy doesn't work that great with stocks over 50 bucks, so we'll cap it at 50. The minimum short float has to be 20, so these stocks going to 52-week highs with a minimum of short float. Got to have a daily RSI, a minimum of 60, so we're not too overbought or too oversold. And then the S&P changed today. What this means right there is the S&P is either flat today or it's up today. So there may be days when I share this with you guys and you're going to say, Steve, why isn't anything coming out? Well, it very well could be this filter right here, S&P changed today. We've got to be positive on the day to have confidence that these things are going to rip through their 52-week highs and the short squeeze is going to move them higher. Let's take a look at SQ again here. 45% short the float. And if I back test this real quickly, it's, you know, it's not a bad 5-day hold. I'll just go ahead and click OK. It's going to say what would happen if we bought these stocks and held them for 5 days. You know, it's a 2.13 profit factor. It was in the 3s last week, so some of the older trades are starting to drop off. But the average winner is $1.74, average loser is 64 cents, and this would be an equity curve growth. Not a lot of trades, but it does still back test well on multiple time frames. So that being said, I always like to kind of set something up before I just drop it in the window and share it. But I'll be happy to share that with you. All right. All right, how we doing? Golf analogies are equally capturing. Yeah, I was talking to somebody the other day who played golf, and I said, oh, so if you play golf, well, you can understand trading. It's one of the best metaphors there are. Paper trading is like going out to the golf range and just swinging away. But once you start, you know, scorecard and trading real shares and real money, the whole game changes, and you start to realize that golf and trading, basically the golf gods and the trading gods, they share the same floor downtown. They'll mess with you in the same ways because there is so much that is between the ears. Trading and golfing is a very mental game in both. There's always great analogies. Play within yourself, you know, play within, don't be just trying to drive driver every hole. Play within yourself, you know your limitations, know your options, know your risk reward. You know, do you really want to try and fade it into the wind with the water on the left? You know, risk reward, I could go on and on. All right. It's possible that my squeeze 52 is different from yours, Leslie. Sometimes it may, you know, I may make adjustments here and there, but that's the beauty of customization. If you have any further questions, you can always email me, Leslie, and I can maybe try and figure out if there's something that you need. Got a minute or two for any questions on functionality, or maybe look at a chart, but no more than 2 or 3 minutes, and we're going to turn it over to Scott and let him give you a promo code. Yeah, the queues, I saw that earlier, and I talked about that earlier. Again, this is our leadership. They had a bad day like everybody else did, but this is your level right up here. You know, the high of that 139.64 is all-time highs. I fully expect, John, that you're going to see some resistance and some supply, as they call it. You're going to run right back into supply. So, you know, where it goes from there, I don't know. It was a very volatile down break. It was a very volatile bounce back. I wouldn't be surprised if we chop back and forth for a little while before maybe making a further assault on that new high. Is this software only available on TradeStation? No, Ron, it's actually the opposite. TradeStation has kind of a lightware version of what we're talking about here. What you're looking at is the actual downloadable version. I believe TradeStation has a lot of the functionality that we do. I don't know if they're missing too much, but it's not the downloadable version that you're looking at here. It's something that's incorporated into TradeStation, much like was done with E-Trade and Scottrade, soon to be Ameritrade. So, all right. Anything else you want to add, Andy, before we sign off and give it to Scott?
No, you
Tell them how to make some savings. Scott? Let me unmute you. There you go.
All right, that's better.
Yep.
So yeah, thanks for the presentation, guys. And I want to remind everyone we have a podcast. There's new episodes every Friday. We started in December, so just making the announcement every webinar for at least a little while, letting everyone know so we can become subscribers. Just search for Trade Ideas Podcast in your favorite podcast app, and it should pop right up there. Go ahead and subscribe to that. You get the new episode as soon as it comes out. You can also download any of the previous episodes in the timeline. There's a couple in the archives. It'll probably be worth your while to listen to last Friday's, and then you'll be ready to listen to this Friday's. So do tune into that. And we also have a promotional code that's good this month, Trade for Alpha. It's going to be the way you see it on your screen, or you can download the handout in the Handouts panel. And you go to webinar interface, there's a little place that says Handouts. If you just click on the arrow or the plus next to that, you can download an attachment. It's got some of these slides with the contact information and also the sale code, which is Trade for Alpha, just like you see it, all caps for the letters. And that's 15% off your first month or year of standard. And you can also use this to upgrade, even if you're just switching from standard to premium. You can apply the same code. To upgrade, you can go to your account management section on the website and just click on Change Your Trade Ideas subscription, and you can do that there. Otherwise, just go to trade-ideas.com/price as a new subscriber, pick your plan, and subscribe using the code. Remember that both standard and premium come with a full hour of one-on-one training with Steve or Andy or Jamie. So after you become a subscriber, watch some of the getting started videos, go to the trading room, learn a few things, and figure out what you want to learn during your hour of training, and you really get a great head start. It's part of the concierge service of onboarding that we do. We like to provide a nice level of service for all of you. Any questions, email us, info@trade-ideas.com. You can also follow Steve on Twitter. He's Today Trader. So Steve is Today Trader. Jamie Hodge is QuantBot. Dan Merkin is Trade Ideas 1. We also have Trade Ideas and some other handles on Twitter. Find us on Facebook and follow the page, facebook.com/TradeIdeasPro, because that way you can share some of the things that we post there that's unique to Facebook with your friends and bring them on board. with the Trade Ideas Love too. But if you do have a technical question, send that email to info@trade-ideas.com. That goes to our help desk software. You can reach out to Steve or Andy directly. They're Steve at or Andy at. And the phone number is there if you have a billing or account setup question. But if you have a technical question, the info@ is the appropriate place to get the fastest correct response. Thank you, Steve and Andy. We'll get the recording of this up a little bit later tonight, and everyone will get a reminder email tomorrow. Also, we have a webinar tomorrow, the Q&A demo session with CEO Dan Merkin and our Chief of Operations Brad Williams. So stay tuned for an invite for that. You should be getting that this afternoon, and we'll look forward to seeing you there as well. Thanks, everyone.
All right, sounds
Thanks,
good.
Scott. Thanks, everybody.
Yep. Bye, guys.